Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. Well, we're seeing some mixed trade in the grains this morning as well as the cattle futures, hogs to the plus side. And Scott, thanks for being with us. Let's talk about this cattle market initially trying to bounce on the open this morning. But, feeders back down here and we've done some technical damage there, haven't we?
Yeah, we have, and thanks for having me. But we've broke some trend lines on the feeders. We're at all-time high prices, and we've got the funds long and got quite a few longs carrying on the books. So when you start to see outside market news that gets a little rocky, and you start to see broken trend lines, got to be very careful there. We can be bullish. We can talk about fundamentals and say what we have going for us in the cattle industry, but we have to respect, okay, when funds do start diving out of stuff, we see some chart damage. There's a lot more hedging that happens when you have these big down markets like we had this last week, because producers are pretty open. We've got this bullish story. We're riding it. This is our chance to cash in and have some profitable years, and it's much needed. I mean, it's been years of suppressed income in the beef production sector. So you're trying to get all that you can. So you see that roll over, you see some broken trend lines. You're going to start looking at some hedge protection. What can I do to protect myself here? What do I do? So you get a lot of those questions, and those nerves really kick in, and that can just kind of add to the fire a little bit when you are on those down swings. So recovering today for now. I guess today would be it was a little lower on the start. That's a third day lower. Sometimes they can have those 3-day corrections when the funds are that long, and now we're just going to be waiting to see, if we can find a bottom. Maybe it's this week, but we do have the end of the quarter, end of the month. So it feels like I want to keep my head down a little bit and kind of turn the page into next week, because there's a lot of shaking up that has to happen here just yet today and tomorrow yet to end the week.
Yeah, like we said, end of quarter, you always get some profit taking there. The funds were long, so maybe we should have expected this, I guess. But then, the government shutdown has certainly been looming over the cattle market here. Now, you mentioned we started off with feeders because feeders are the leaders, but live cattle, are we holding support there that we need to, or what are you watching?
Yeah, we're holding some support there. I mean, I've got a closer eye on cash than I do possibly some of that support in live cattle. I mean, is it going to hold on or not? We feel like we've got the leverage there, but we've got quite a bit of premium out there in these futures. So we've had this break, and we're talking about how horrible the cattle have traded this week, and I still have 190s on the board, 192, 195 for Feb and April. So they're still in a great spot. So corrections are going to happen a little wilder. I mean, even in 2014, we had some $8, $9 corrections, and then we're able to fight that off and still go find record highs. So still feel like that's where I want to be. I don't see the growth happening in the cow herd. I still see female slaughter at a higher level. I still see females on feed, and the attitude that I get from producers is more, this is my opportunity to cash in and make some money. So the culling the cows, I see a long line of guys making sure, hey, are decreasing cow herd size, because they're going to sell off some of those. When you can get $2,100, at sale barn coming home with your cow that's old or has some long toes, you're going to cash those in rather than trying to grab another calf out of her. So still seeing that, make some profit, cook while the pot's hot, trying to sell now rather than rebuilding, in my opinion. I don't see it yet. So this is going to carry on the supply story on into next year, into the fourth quarter, tighter numbers next year than we had this year, and we're already seeing that in all the reports.
Yeah, cash trade this week, though, we haven't had a lot of it, but steady to a bit lower here because the Packers did have a little leverage with the board doing what it did, right?
Yeah, we had some bids at least pop up. You get those, triple digit down days, and the Packers will try to get some bids out there just to see if they can find some low hanging fruit. And it was kind of fell on deaf ears so far, some 290, some 292 in the meat. And we had some 184 bid by regional in the north that was passed. So kind of a couple dollar lower bids, but I didn't really see any traction pick up. So I think if the Packer wants some cattle, we're still standing firm. And also we've just got this excellent feeding weather that it's a little bit appealing just to say, well, I can hang on and put some of this weight on now while they're gaining, and got some cheaper feed that we're not used to. We've got some new crop coming in at a lot lower price. So I do see that we're going to probably keep feeding what we have. And we all know that these feeder calf prices are high. So we are going to have some carcass weight issues in the end of the fourth quarter. That's my one downer, I guess, that I have. That we're going to have larger weights, but we need that meat. That's one way that we're going to have to provide some meat on a tight supply, is we're going to have to put more weight on them. And I think I don't think we're going to get discounted on some of these large carcass weights we're going to have to get used to in the fourth quarter.
As long as you're talking about demand, just quick address the fact that, when we start talking about economic concerns, you get all the bears that come out and say, hey, that's going to wreck this cattle market. But every time we get choice boxes under $300, it seems like we find really good demand. So you think that's going to hold there?
I think the demand's been staying great condition. I still think that's the case. But yeah, overhanging factor is, what's this economy going to do? Nobody really knows. We've got this high interest rate that's been hanging on. It's going to hang on longer. We've got stock markets a little bit iffy here. So there's a risk there. That is probably your biggest risk to this demand, is the health of the consumer. We've been through quite a bit in the last 3 years with COVID and all of the different upswings, downswings in the markets, and demand has been holding strong. There's still a consumer out there that wants a high quality beef product, and they love the taste of it. So I still don't think we're overpriced in the market. I still think some of those steaks you can go out and cook yourself. Consumers have learned how to do that. And so I have high hopes that this beef demand can hang on. And the one note I saw somebody write yesterday was, when boxes were at $450, we were told, well, you're not trading boxes, you're trading fat cattle. So some of these fat cattle guys are a little bit torn by that and haven't forgot that hey, they say, well, we're not trading boxes, we're trading live cattle. We don't have near as many of them. So I thought that was a nice comment yesterday. I saw.
Hogs, little bit of a bump up here this morning so far, but we have a Hogs and Pigs report out this afternoon. Is it going to show contraction, and will we see, confirmation of lower farrowing intentions as the trade is guessing right now?
I think we're all expecting that. So that gives me a little bit of nerves, thinking, okay, if we're all expecting this decrease in the, we saw sow slaughter, farrowing intentions, all lower. I mean, we've talked about that enough to where if it's not what we think it is, then we're in a little bit of trouble there. So it kind of has to happen. And if it does happen, well, we already knew that. So I don't think it's something that can just really put a big shot in the market. Hey, it looks like we got tighter supplies coming. I still think we've got too much supply in front of us now. We've had these $14 isoines all summer long. Started earlier than normal. We started in May with those cheap isoines coming out of Canada. So you've had, a long run of these cheap isoines that all these barns seem to be full, at least around in my neck of the woods. Here in November and going forward, we're going to have quite a bit of supply to chew through, and that's going to take us a while. So end of fourth quarter into the first quarter, I think it's some tough sledding up front. So yes, we've got that story later that we could have some tighter numbers, but I think it's going to take us a little while longer than we expected to get there, probably.
Yeah. So let's talk about the grains quick. Soybeans, seeing some pressure again here. We could not close above the 100-day moving average yesterday, so that was problematic. And we kind of ran up into resistance on corn as well, didn't we?
Yeah, beans. That chart looks a little bit on the rough side, and they've not quite found a spot to hold here yet. Holding the weekly low, I guess, that we had earlier in the week, and that's really all you can put your hat on right now.
Right.
So to me, they're still looking like there's risk down to that 1220 to 1250 and under. 1220 would be a number I'd have to throw out there if I really had to pick a spot. So I'm thinking still negative on the soybeans. We've got the harvest. We're right in on it. So we're going to be seeing a lot of those grains come to the market, and these beans want to be sold. They want to sell these beans, cash them in. It's still a good price, and they're going to make money at this. So still think that's going to happen. We don't have the demand kicking in on the soybeans as I'd like. I guess the corn or the beans can both be thrown in that. We've got that dollar getting stronger and surging higher. The one thing on the corn technicals, though, absolutely flat. It's been
Yeah.
riding very steady, not breaking out either way. Like I've said before, I think the bulls and the bears, you have your targets lower and higher. They're not really that far away. There's nobody thinking we're going to 7. There's nobody thinking we're going to 4 or lower. So here we sit, absolutely sideways. It makes it easier to make some marketing decisions, but been a pretty boring sideways trade.
Well, and like you said, we're in the middle of harvest here now, and then exports this morning, not enough to give the market any big, excitement, right?
That's exactly right. I just think that demand needs some help. We need that spur somewhere, some sales. The weaker dollar, it hasn't been going for the grains lately.
Yeah, we need a spark. All right, thanks for joining us, Scott Varilek with Kooima Kooima Varilek. That's Markets Now.